Welcome to the deep dive. Today, we're really zeroing in on Roblox Corporation. That's ticker RBLX.
Yep.
We've gone through, the latest stock reports, earnings calls, news, all that stuff.
And the goal here is basically to pull out the key insights for you, what's really going on with Roblox financially and what might be next.
Exactly. Cut through the noise. So let's just jump right in. Q1 2025. They really smashed their own forecast.
Oh, absolutely. I mean, revenue was up 29% year over year. That's $1.035 billion.
And bookings looked even stronger, right? Up
Yeah.
31%?
Yeah, $1.207 billion in bookings. Pretty impressive.
And what's driving that? Users, I assume.
Definitely. Daily active users, DAUs, hit 97.8 million. That's a 26% jump.
Wow.
And those users are spending more time, too. Hours engaged reached 21.7 billion.
Up 30%.
That really speaks to the platform's stickiness, doesn't it?
It really does. And it's not just one specific group driving it.
Right. I saw notes about the geographical spread. Japan up, 48% DAU?
And 50% in hours. And India was even more dramatic. DAU up 77%, hours up 78%. Incredible numbers. And it's not just kids anymore, right? The older demographic.
Exactly. The 13-plus group saw DAUs climb 36% and hours engaged up 40%. That broadening appeal is, well, it's really important.
Yeah, diversification helps de-risk things, makes it more stable long-term.
Totally. Less reliance on just one segment or region opens up more monetization paths, too.
Okay, so users are up, engagement is up, but what about the business side? Efficiency. I saw mentions of dramatic margin expansion.
Yeah, that's been a focus over the last 6 quarters or so. They're getting much better at managing costs.
How are they doing that?
Well, partly through technology, like leveraging AI for things like trust and safety moderation. It's about working smarter, not just, cutting everywhere.
And that's showing up on the bottom line, or at least in cash flow.
Big time. Record cash flow levels, actually.
Wow.
Operating cash flow was $443.9 million. That's up 86% year over year.
86%.
And free cash flow, even better. $426.5 million, up 123%.
Wow.
Plus, they're sitting in a pretty hefty pile of cash. About $4.5 billion gross cash on the balance sheet.
That's a solid safety net. Gives them room to maneuver, invest.
Exactly. Flexibility is key, especially in this market.
Let's shift to the creators. They're kind of the lifeblood of the platform, aren't they?
Absolutely fundamental.
Yeah.
And they're doing well. Developer earnings, or DevEx, hit $281 million in Q1.
Which is up?
Up 39% year over year. They're actually on track to earn creators over $1 billion this year.
$1 billion. That's a huge milestone for that ecosystem.
It really is. And it's not just the absolute top creators anymore. We're seeing significant growth in earnings for experiences ranked, say, 11th through 50th.
Yeah.
The middle is getting stronger.
Which suggests a healthier, more diverse ecosystem overall.
Right. And Roblox is actively helping them, too, with things like differential pricing, and they rolled out experience price optimization.
Oh, yeah, I saw that. It said it boosted median earnings by about 4%.
Something like that, yeah.
Yeah.
And regional pricing recommendations. They're investing in their creators' success.
Makes sense. Happy creators mean more content, which means more users.
It's a virtuous cycle, basically.
So, looking ahead, what are the big strategic bets? AI seems to be everywhere.
Yeah, they're integrating AI across the board. Content creation tools like Cube 3D, conversational NPCs, improving trust and safety, like we mentioned.
And expanding beyond core gaming experiences.
Yeah.
Advertising, e-commerce.
Right. They're building out the ad business, partnered with Google on that, and exploring e-commerce. There was that Shopify integration mentioned. It's all part of a very ambitious long-term vision.
Which is?
Reaching 10% of the global gaming market and hitting 1 billion daily active users.
1 billion. Okay, that's ambitious is the word.
Definitely. But you can see them laying the groundwork, expanding into new genres, too, like RPGs, sports racing, battle games.
Yeah.
Those grew 69% year over year combined.
So they're broadening the type of content significantly.
Trying to capture a wider audience.
Okay, it sounds pretty positive, but we need to look at the other side, too. Risks, concerns. They're still losing money on a GAAP basis. What?
They are. Net loss in Q1 was $215.1 million. Still significant.
And the guidance for Q2 wasn't exactly stellar, was it? They flagged a sequential decrease.
Yeah, a dip in bookings, adjusted EBITDA, and free cash flow expected in Q2. And actually a wider net loss before things potentially improve in the second half of the year.
Any reason given for that expected dip? Seasonality? Investment phase?
Could be a mix. Maybe cycling tough comps from last year. Maybe investing heavily in some of those initiatives we just talked about, impacting short-term results. Investors will be watching that second half recovery closely.
And there are other flags. There's an active SEC investigation ongoing.
That's right. Details are usually scarce on those, but it adds a layer of uncertainty.
Plus, stock-based compensation is still a pretty big line item.
It is, yeah. Common for tech growth companies, but it impacts shareholders. And then there's valuation.
Right. Some analysis put the fair value estimate around, what, $63, $64? But the stock's been trading closer to $70 recently.
Yeah, around $69, $70. It suggests the market might already be pricing in a lot of that future growth and success. The current price might be a bit ahead of fundamentals, according to some models.
So potential for volatility there if growth expectations aren't met.
Definitely. It's priced for strong execution.
Yet, despite these points, Wall Street seems generally positive. Average targets are pretty close to the current price, maybe slightly above.
Yeah, the average target, based on recent analyst ratings, is around $69.33. And you had Oppenheimer recently bumped theirs up to $80.
So still bullish overall, seeing it as a potential breakout growth stock even.
There's definitely optimism about the long-term story, the platform, the user growth, but maybe some split sentiment on the near-term growth trajectory versus the valuation. It captures that tension.
Let's quickly hit some key ratios just for context. PE ratio is negative, obviously, because of the losses.
Right, TTM PE is around negative 62.
Price to sales.
About 14.4 TPM, which is high, but not uncommon for high-growth software.
Price to free cash flow.
Getting quite up there, around 63 TTM. Reflects that strong cash flow generation we talked about, but also the valuation.
And price to book is extremely high, over 175.
Yeah, that often indicates the market values the intangible assets and future growth potential far more than the current book value of assets. Investors expect significant future earnings.
And revenue growth is projected to continue strongly, but EPS still negative, though improving hopefully over the next few years.
That's the projection, yes. Continued strong top-line growth with a path toward profitability, although the timeline for positive EPS is still a ways out, according to estimates.
Okay, so wrapping this up, the picture is, well, it's dynamic. Strong growth in users, engagement, creator earnings, improving efficiency leading to great cash flow, big ambitions backed by a solid cash pile.
But balanced against ongoing net losses, some near-term guidance caution, that SEC probe lingering, an evaluation that already seems to assume a lot of future success.
It's a classic growth stock story in many ways, isn't it? Huge potential, but also significant risks and hurdles to clear, especially on the profitability front.
Precisely. It demands ongoing scrutiny. Things are moving fast.
So what's the biggest takeaway for you listening to this? Does the growth story outweigh the risks? Does the valuation give you pause? Something to definitely mull over.
Yeah, how does this fit into your own market view?
And hey, if you found this focus breakdown helpful, if this kind of deep dive adds value for you, please do subscribe to the channel and hit that notification bell. It really helps support us bringing you more analyses like this one.